What's up, everyone? Good morning. Good morning. Hope you guys are doing well. Today is April the 2nd. As you can see, overall markets up, down, dropping about 2% here in the overnight session. Main news that we had, of course, yesterday was Trump speaking, which was at 9 p.m. Eastern Standard Time. You can see overall markets dropping. We'll kind of talk about the news that we had, what to expect kind of moving forward. As I mentioned, we have to take this day by day. A lot of news. We recently had the war ending, and then, of course, some more news saying it's most likely going to be prolonged for another 2 to 3 weeks. So, let's go on to the economic calendar and let's kind of talk about the red folder news that we have coming into today and some of the news that we had in the overnight session. Before we do that, what's up, everyone? Good morning. Good morning, B Roots, Hosam. Good morning, Robert, Gran, Maria, Sa, Knight, Juan. What's up, everyone? Dante, Lamit, Cosmic, Wisdom. Good morning, Cinna. Good morning, Robert, Marcus, Dragon. What's up, John, Deuce? Yeah, good morning, everyone. Hope you guys are doing well. Let's first go on to the economic calendar. Let's kind of talk about what was the major red folder news events that we had in the overnight session. Basically, as I mentioned, Trump had a meeting. If we go back onto this, as you can see here, Trump was speaking last night, which was the major news event that we were keeping an eye out for. So that was what's really affecting the market currently. So the major news event that we had was Trump was mentioning. Let's see if I can find it. Core strategic objectives nearing completion. Essentially, it was basically mentioning U.S. forces have crippled Iran's military to an extraordinary degree. And then it was also mentioning, right, extending the war another 2 to 3 weeks here. So we basically went from our key levels that we had earlier into the week where we had that original pop. And as you can see, nice continuation towards upside. Most of the people thinking the war is going to be over. And of course, right, the news drop towards the downside and extended 2 to 3 weeks. And now you can see markets are continuing back lower. So it's very similar to kind of what I mentioned, which was the tariffs of last year, right? It's on, it's off. And that's why you get a lot of this volatility, which can be a little bit more difficult to manage, especially if we're trading in the overnight sessions, where there's a lot of these big moves in the overnight sessions, not too big moves in the New York session, which makes it a little bit more difficult if you are trying to trade momentum, because the momentum is just happening during a different time, which is these overnight gaps. So let's go back onto the red folder news as for today. We do have some more red folder news. Sorry, if we scroll down here, we have unemployment claims, which is at 8:30 a.m. Eastern Standard Time, and then of course tomorrow, which is a market holiday. The markets are the markets are closed, which is nice. It's going to be a long weekend. Expecting some more volatility, of course, as well. With it being a long weekend, we're either going to have a pretty big gap up or a pretty big gap down. So for tomorrow, average the hour earnings, non-farm enrollment change, plus the unemployment rate. With that being said, let's go on to the charts to see exactly what we're looking for coming into market open. So first, we have to kind of have an overview of what to expect moving forward. So if we go on to the QQQ, as you can see right here, key levels that we have marked out is essentially this previous level of support, now potentially turning into resistance. So as you can see here for the QQQ, we're coming up into this 580 retest level. Now we're about to gap down here as well. Based off what Trump's saying, of course, you have to take it with a grain of salt, because he can easily come over the weekend and say the war's over once again. But based off what he's saying, right, 2 to 3 more weeks of war. And as we kind of talked about, the longer the war is prolonged, the farther we're going to drop. But that's a good sign. If we can drop further, that's great, because that's just going to mean once the war is officially over, right, we're going to have that nice rally back towards the upside. So if we're looking at this here on the QQQ on the daily chart, if we can reject off this 580, which currently we're down about 2%, what I would like to see is at least moving forward, if we can get a break back underneath this 560 and a push down in towards either even that 540 and below, it would be so nice if we can get this retest all the way down in towards 540, right? Is this a possible scenario? It can be, especially if the war is prolonged. And let's say within the next 1 to 2 weeks, we end up dropping down towards that 540. This would be a super solid area to look for longs, right? Swings back towards the upside, right? Besides that, so far, most pops just have been shorted towards the downside. So that's something to keep in mind. But this is a super solid area. Even our 560 was a super solid bounce here as well. So moving forward, I would like to see that 540 if we can get there, especially as I mentioned with the war being prolonged. That would be super solid if we can get down in towards that key area. Besides that, at least coming into market open here today, let's go back onto the lower time frames. Key levels that I have marked out: 584, which is the area that we broke down from last week. Another kind of rejection. Now levels that I have marked out: 576 along with this 570, the area that we broke out from. So coming into market open, right? This was the news that we had earlier into the week with the war almost being over. And of course, now if the war is being prolonged, we're just going to gravitate all the way back down and towards that 586. So that's going to be one of the key levels coming to market open. All we can have marked out coming into today is our 576. And we can also have marked out really this 570 general area. You can even readjust this if you'd like down in towards, now it can be this like 568. So for the Qs coming into market open, you can have these levels drawn out, which is essentially the area that we broke out from. If you do want to see some downside, pop and fade off that 576 for a push down in towards that 570, which will be that news candle low. If you want to see some upside in this case, it would have to be the reclaim back above this 576. Of course, we do have pretty big gaps on both sides, but this would be the long scenario back above our 576. I'm not expecting too much today. Really, it's just going to be that pop and fade, plus coming into a long weekend here as well. I just would like to see it kind of gravitate lower down and towards that 570 along with that 568 here on the Qs. As for the NQ key levels that we have coming into market open, fairly similar thing here. What I have is the area that we broke down from last week. You can see a little bit of rejection here in the overnight session. Now we're getting this nice little push towards the downside. Key levels that I am going to have marked out: you can mark out this 23,600. You can also mark it out down into the area that we broke out from, which will be this 23,500 as well, where you have multiple touches. So for the NQ, you can see a nice push towards the upside. This was that news candle. Now, if you do want to see some downside, pop and fade down in towards that news candle low, which is basically when we originally had that war news towards the upside. So this is a scenario for the NQ coming into market open here. As I mentioned, whenever we do have these big moves in the overnight session, it just makes it a lot more difficult to trade that New York open. So you make sure you are on the 5-minute or 15-minute time frame. If you're on the 1-minute time frame, you can easily get chopped around, especially since there's not as much momentum, especially on the lower time frames during New York Open. So this is the scenario that I have for the NQ coming into market open. Of course, if we do want to flip back bullish, right, at least I would like to fill its main objective first, which would be that 23,500. So longs for me really aren't on the table. You could be looking for kind of a couple scalps towards the upside, but really I would just like to see this pop and fade for a push down in towards that news candle low first, before we see any sort of mean reversion here. Similar thing here on the QQQ, very close to the level that we have, which is that news candle low. I personally would like to see the markets gravitate down in towards this news candle low before we see any sort of mini kind of bounce here on the overall market. So that's the key level for the ES. As you can see, we have that news candle low. We also have our original news candle low here as well, which was that war news from 2 weeks ago. So for the ES, right at a key level, if we can honestly flip back underneath, we can see a pretty big push towards the downside. Similar thing here with the SPY. I'm not sure where the SPY went, but for the SPY, very similar thing here. The key levels that we have marked out, we can even refine this, is going to be that news candle low that we had from 2 weeks ago, and plus the area that we broke up from, which was at 642. So SPY, nice kind of push towards the upside, now breaking back underneath. all the way back down in towards the area that we broke out from, which is our 642.50. So for the SPY coming into market open here, let's go back onto the lower time frames. As I mentioned, the key level that we have marked out is going to be that news candle low. So I would like to see some sort of push down in towards that news candle low here, 642. If we can see some buyers step in here off that news candle low, we can see a little bit of a mean reversion back up in towards our 646 and above. If ultimately we break underneath that 642, then we could see a flip and a push back down in towards that 638 here and below. So for the ES, in the SPY, and also the Qs coming into market open, your news candle low is going to be key. So we'd like to see the market gravitate there first before doing anything else, which would essentially be equilibrium. So that's what we have for the SPY coming into market open along with the Qs. Now let's go on to a few other tickers here. Also, if you guys do have any charts or tickers you'd like me to go over here now, you guys can drop them in the chat. If you guys are enjoying this so far, I appreciate if you guys drop a like. If you guys haven't joined the free daily watch list, that of course is in the description below here as well. Okay, let's go on to the SMH. So as you can see here for the SMH, let's go into the daily chart. SMH, nice kind of bounce off these lows 370. Now you can see a little bit of reaction, another gap down, but overall the SMH is still holding up compared to the rest of the names. So for the SMH, it's going to come back down in towards our key level support. This was the original breakout level here as well. So for the SMH, 370 is your higher time frame key level support that you like to see the markets bounce. Besides that, right, similar thing to the SPY and Qs, you would like to see that push down in towards that news candle low, which happens to be that 372. So that's what we have for the SMH. As for the IWM coming to market open, key levels that we do have marked out, of course, is going to be that 252 along with that 242. You can see a bunch of consolidation here in this general area. What I would like to see is really the reaction off the top and bottom of the range here on IWM. Currently, we're just kind of consolidating in this general area. Okay, now let's go on to Tesla and the rest of the tech names coming into market open. Starting off on Tesla, as I mentioned, one thing to keep in mind is that a lot of these tech names, we're just going to have this kind of relief bounce. But overall, right, the markets, especially if the SPY and Qs does not bottom, the rest of the tech names are not really going to bottom here as well until the SPY and Qs can find the real bottom. In this case, we're just going to have these mini relief bounces, and these are going to be shorted right towards the downside, especially with the SPY and Qs looking like it's going to gravitate towards the downside here. So for something like Tesla, nice little bounce here off that 360, right? Still have this downtrend in play, but not as interested, of course, until we can, right? The Qs can break back above key levels. Tesla would have to break back above this 380. We'd have to break above this trend line here as well. So for Tesla, another kind of rejection here once again off this 380 actually. So, but to come back down, fill its gap, and come back down in towards that 360. So key levels for Tesla coming into market open. Of course, we have our last week's lows. We have our 380 key level. And then now what we can have marked out as well is just going to be that previous day highs along with our high that we created here on Tuesday. And then another level that we can have marked out is all the way back down in towards the area that essentially we broke out from. So we can kind of mark out this general area, which is going to be that that Monday's highs. And we can drag this over here as well. So coming into market open for Tesla, let's keep an eye out on our 374. If we do want to see some downside coming to market open, potential pop and fade here off that 374, we can now see a push down in towards that 366. If you want to see any sort of reclaim back above our previous day lows, hold above our previous day lows for that continued push back up and towards that 380. So that's what we have for Tesla coming into market open. Right, let's keep an eye out on our previous day lows. Tesla's releasing the production delivery numbers today before market open. Okay, so we're going to have a nice little reaction coming to market open. So that's something to keep in mind. We'll talk about this a little bit later, most likely when market does open. But Tesla does have delivery numbers coming soon. Thanks for that. As for Nvidia, key levels that we have coming into market open here is our 174. As I mentioned, a little bit of a bounce, nice kind of buyer stepping in above our previous day highs. Currently, just right back towards the downside here, gapping underneath. Now what we have is our 174 and really the area that we broke out from. So you can see Nvidia's a little bit weaker compared to the rest of the tickers, already back down in towards that news candle low compared to a few other names which are not at our news candle low as of yet. So Nvidia already hit that news candle low, which in this case is that 170.90s. So coming into market open here for Nvidia, this is the key level that we have marked out. If we do want to see some downside underneath that 174 continuation lower down in towards that 169 along with that 168, if we can reclaim back above, potentially we can see a move back up in towards this pre-market high 172. So for this, right, keep an eye out on that 170. With the overall markets rejecting off key levels, at least coming into market open, right? I have a longer term outlook. I would like to see at least one more push towards the downside, right? SPY down in towards key levels, at least for Qs. I'd like to see another kind of retest off our 560, and there is more room down in towards that 540. So within the next couple of weeks, if we can get that push towards the downside, that would be fantastic. Similar thing with the SPY. If we could get that retest off of our 620 or 600, this is the best retest possible. You can see we're kind of holding this order block so far on the weekly time frame, which is we're expecting a reaction coming to this week, which was expected. But if we can break underneath that 620 and gravitate down and towards that 600, this is going to be a load the boat area and a very key area here for both the SPY and the Qs. That would be super nice if we can get that retracement. So that's what we have for the overall indices. Now let's go back onto a few tech names here. As for AMD, this one's just been consolidating, really not too much to say. Consolidating in between its previous kind of range, 220 along with this 190. As for AMD, the key levels that we have marked out is our 208. So nice break above that 208 yesterday, hold above that level for a push up and towards this 212. But as you can see here now, gap down underneath this 208. So now for AMD moving forward, if we want to see that gap fill back towards the upside, we also have this mini gap towards the downside. So for AMD, I would like to see a little bit of buyers kind of step in coming to market open and a push back up in towards that 208. So once we get that push back up in towards our 208, you can see a potential fade off this level for a push back down in towards that 204. Or if we can base back above that 208, consolidate, potential move back up in towards that 210. So that's what we have for AMD coming to market open. Apple just kind of consolidating, not really doing too much in between that 255 along with that 246. Google in this case, I mentioned the key levels that we have marked out was at 294. So Google still technically bearish here on the higher time frames, kind of coming up in towards this retest level, which was our previous level of support, now turn into resistance. If we can reject off this area, which we currently are, we can see a push right back towards the downside, right? Daily time frame still kind of building up these lower highs. So this is basically the exact rejection area here on Google. So far, a little bit of rejection, and now we're gapping underneath. Key levels that we have coming into today, 294. Other levels that we have marked out here now as well is our 286. So if we do want to see any sort of downside here on Google, right, you can mark out your 296 or 286. You can mark out that previous day lows. If you do want to see continuation underneath that 290 or now underneath that 286 for continuation towards the downside. If you do want to see any sort of mini buyer step in, potentially that previous day close retest, that gap fill retest that we have up in towards our 290 coming to market open. As for Microsoft, another one, rejecting off key areas here, 372. This is our higher time frame retest. Currently a little bit of reaction here right off that 372, and now we're also gapping down now here as well, right in towards the area that we broke out from. So for Microsoft moving forward, break back above, we can see a push up and towards that previous day close, hold underneath that 364. We can see that continue push down in towards its gap fill that we created here, down in towards that 360 on the higher time frames. As for Meta, This one, key level that we have marked out is going to be that 368. So Meta is the one that had a nice bounce on Tuesday. Wednesday, nice bounce here as well. Now we're actually underneath that 368. So moving forward here, rejection off that 568, push down in towards, now it's going to be that 552 and below. Reclaim back above, we can see this mean reversion back up and towards that previous day close. And then for Amazon, this one kind of went towards the top of the range, a little bit of rejection here, and now we're back down in towards that 206, so kind of rejected right off a key level here. And then for Netflix, this is the one that I want to see some continuation. Really not too many buyers that stepped in above that 95 key psych level, and now you can see we're just kind of consolidating. So Netflix, I want to see a stronger push up and towards potentially kind of 98 and 100, but it does seem like it's kind of slowing down just a little bit. So if you do want to see any sort of push higher, it's still going to have to be the reclaim back above 96 for any sort of continuation. Okay, so coming into market open here, I know that was quite a bit, but really the main game plan for the Qs coming into market open here along with the SPY is we're going to be looking for the pop and fade down in towards this news candle low, right? That's going to be key for the overall markets because essentially this is the area that we broke out from because this was the war news that we had on Tuesday. And of course, now we have some more news. So this is expected that we gravitate down in towards that news candle low, which is essentially the area that we broke out from. Sorry, it should be back up. Stream should be good. Let me know back now. Yeah, if you guys have any issues with the stream, you guys can just refresh it and it should be all good. But yes, as for the SPY, similar thing, we're kind of looking for this news candle low. So I'd like to see kind of SPY and Qs push down in towards this news candle low, which will be this 642 coming into market open. Okay, now I'll go over a couple more tickers here. If you guys do have any tickers, you guys can now drop them in the chat. Let's take a look at oil. As you can see, oil is still continuing to make a brand new high for the year. Higher lows, as you can see, have been being built. Kind of retesting this previous down close candle or this general area. And I can see we're making another brand new high here in the overall market. So for USO, you can just kind of mark out this general area. If you really want to extend it, you could have extended it all the way down in towards that 122, which as you can see, we have multiple touches here, touch here, touch here. Touch yesterday, and now you can see we're gapping above key levels, and now we're having a continuation towards the upside. But as for USO, the key levels that we have marked out is now going to be, of course, the new high that we created here for this week, 130. Now you can see kind of this gap and go here in the pre-market, and now we're continuing to push higher here as well. If we're looking at this on the daily time frame, we're going to actually have to go back all the way towards the weekly time frame to mark out brand new levels, but creating a brand new high here all the way from 2018, 130 got hit. And if you go on to the weekly, you're going to have to mark out levels all the way back from 2018, right? Some levels all the way back from 2015. So for oil, USO, you can see pretty strong breakout towards the upside. Next level that we do have is going to be this weekly gap all the way back from kind of this 150. Other levels that we can have marked out here is now just going to be this 136. And you can mark this out here as well, which is our 143. So if you're looking at oil on the higher time frames, you have a couple levels that we have marked out, 136, which we just hit. Next level 140, along with our 143 here on the higher time frames. For oil, right, as you can see this, every single dip being bought up, higher time frames still very much intact. So as long as you can maintain above these down closed candles, right, maintain above these higher lows, we are very much bullish here on oil, and we can expect continuation towards the upside. So this is what we have for oil moving forward. As for the rest of the names, let's go on to Palantir. Palantir, a little bit of a drop towards the downside, actually rejecting right off that key area we talked about yesterday, which was that 150. Higher time frames, nice kind of rejection coming to market open. Now we're having a little bit of a gap down here as well. So 146. Right back down in towards that 142. This is essentially our news candle low. We can see a little bit of a bounce coming to market open, push back up and towards our previous day low here is in play. If you do want to see some downside underneath that 142 or pop and fade here off that 146 for continuation towards the downside here as well. MU, nice push towards the upside yesterday, nice mean reversion. Now you can see we kind of gave up all those gains from yesterday, right? Pretty big gap down, back down in towards that 152. Same thing for SNDK, really solid push, but right back down in towards that previous day lows. And a lot of these other tickers here as well, right? Intel, WDC, of course, with the major news event that we had yesterday. So coming into market open and what to expect moving forward. So we do have a long weekend tomorrow. So the markets are closed. As I mentioned, the main thing, of course, is the war news that we have, right? Technicals are going to be secondary compared to the news. So that is something to keep in mind, of course, if you're trading in this market. The New York session has been a little bit more difficult to trade. We haven't had as nice of moves because a lot of the moves have been happening later into the day or, of course, in the overnight session. But at least coming to market open here, key levels, as I mentioned, is just going to be that that 576 and that 568. Sorry, we're looking for that pop and fade coming to market open for a push down in towards that key level on both the SPY and the Qs. So with that being said, coming to market open, right, I am leaning slightly bearish. I'm neutral, right? Bearish on the higher time frames. Obviously, we're gapping down here intraday here as well. I would like to see any sort of pop if we are going to look for a continuation lower. Similar thing here with Tesla. We could be looking for the pop and fade off our previous day lows for continuation towards the downside. Nvidia, pretty big gap underneath our previous day low. So going to be a little bit more cautious on Nvidia. Key level that I have is at 171. AMD, we can keep an eye out on that previous day lows here as well, 207. As for the rest of the names, right, you can see Google, Microsoft, Meta. These were the ones that had nice pushes yesterday, but of course now with this gap down, just kind of gapping down in towards these key levels. But really today, we're just going to keep an eye on the pop and fade here on the Qs off that 576 and then SPY off that 5. And then SPY, now the key levels, we actually can mark this out, is going to kind of be this pre-market high, which is going to be this 648. So that's what we have coming to market open. As I mentioned, right, just be a little bit more cautious. If you are going to be trading today, make sure to stick onto the 5-minute time frame. We are most likely going to have some sort of news event over the weekend. So if you are in any positions, right, make sure to either size light, or if you have a big buffer, right, you can hold some trailers over into next week. But basically coming into the next week, which is going to be key, plus in the next 2 weeks, it's going to be very volatile since, of course, the war is still intact. Right, we had this nice kind of bounce coming to end of quarter, right, nice kind of pump, and now, right, we can see a little bit more acceleration. It's kind of very similar to last year, right, something like this where we had this nice push towards the downside, a little bit of a relief bounce, and then we end up having that big continuation towards the downside. So potential kind of similar thing kind of setting up, right, nice push towards the downside. We're getting this nice relief bounce, right? We had kind of the war potential kind of ending, which of course now, as you can see, is not happening. So we could see a pretty big drop here on the overall markets, especially as I mentioned, if the war is prolonged, right, for another 2 to 3 weeks, we could see a little bit more downside before we eventually see that bottom. So that's what we have for the Qs, right? Similar thing here with the SPY. I'll kind of have a longer term outlook coming into this weekend, so make sure to stick out for that. What you can do for long terms versus day trading. And then, yeah, for today, main watches, SPY and Qs off our basically that news candle high that we do have. And then Tesla, it's going to be off that 374. It's going to have to be based off intraday price action. So that's what we're going to base it off of today. Similar thing as the past kind of couple of weeks, right? Just be a little bit more cautious for the New York session open. I'm going to stick to that 15-minute and that 5-minute time frame. Besides that, that's going to be it for me today. It's a long weekend tomorrow as well. So I hope you guys enjoy your long weekend, right? Take some time off the screens. Yeah, with that being said, I will see you guys all next week. And yeah, take care, everyone. Have a great rest of the day. Peace.